Hey, what's going on? It's been a minute since I did a video. Today I'm going over the BlackRock report they put out about Bitcoin, and it was mentioned in the comments that every one of their advisors and salespeople probably have it memorized and are using it to pitch people on Bitcoin and sell BlackRock's new IBIT ETF. So it's pretty interesting to hear someone's inside perspective. And what I'm going to talk about today is kind of what this report says, what it means for BlackRock's opinion about Bitcoin, and how they worded it quite well. And I think it was just a fantastic article for their curious investors. So let's hop into it. And I'll do this real quick. It's only going to be about I'll do this quick. It'll be about a 6-minute video, if that. Let's look at this article. It's an 8-page BlackRock report. Page 2 is the first substantive page. And they mention that it's a response to investors that are curious about allocating into Bitcoin. I think a lot of these people are probably high net worth individuals and family offices, people who are worried about inflation. As a little aside, I was on the boat and was talking with a guy who had just pretty much inherited a family business, and they sold it for about $100 million. And he was explaining to me his normal job was a tech consulting for companies that are selling to private equity. And he was explaining to me how difficult it is to beat inflation in the market. And he's always looking for some sort of deal or some way to, keep pace. And it seems like more and more high net worth individuals are becoming aware that inflation is eating away their wealth quicker than they're led to believe. So the article here doesn't start with that topic. It starts with this investing fundamentals, as I call it. And there's a quote from Warren Buffett saying the stock market is a device for transferring money from the impatient to the patient. And this clause is pretty much to soothe investors from short-term moves. It's saying, you, as our clients at BlackRock, are highly smart, intelligent, disciplined individuals, and it's the degenerate traders that are causing these volatility swings in Bitcoin, where you, understanding this as a new form of digital commodity, will be able to hold and endure for the long term, which is the correct move for this sort of asset. So it's kind of boosting the egos of investors and helping them see the value in hodling, essentially. It's a hodl clause. Now, BlackRock talks about risk on versus risk off. And the whole key point here, there isn't really a takeaway, but what they tell investors is that traditional frameworks for risk on versus risk off assets don't directly apply to Bitcoin. It's new. It's a new asset, and it's tough to use traditional metrics to value it. So what they say here is, I think this clause is setting the stage for a small allocation in the portfolio that doesn't necessarily change. And they're trying to just open up. It seems like they're trying to make room in every portfolio for this asset, regardless if investors are thinking there's sort of a risky sentiment, there's more market certainty, more liquidity, more positive expectation going forward, or whether there's high geopolitical uncertainty and increased volatility in a risk-off asset environment. What BlackRock is trying to explain, what BlackRock's trying to convey is that Bitcoin should be owned regardless of the two circumstances. Now, they reference BlackRock. BlackRock continues to reference the Bitcoin white paper, and they talk about the 3 strengths of Bitcoin as it's able to be transacted across borders, and it's able to be accessed by anyone anywhere in the world, and then it's fixed maximum supply, which makes it anti-inflationary. And this is actually, I think what they did here is sort of tailored the positive attributes of Bitcoin towards their clientele. I think the high net worth individuals probably transact in a lot of different jurisdictions, so this might be appealing to them. However, as of now, they're probably buying the ETF, which is still just based in the US. But maybe BlackRock has plans to custody Bitcoin, which could in the future open up new opportunities for transacting and settling payments between different jurisdictions in which a high net worth individual might hold their money. And then finally, obviously, the inflationary concerns are increasing and becoming more significant for many people, and that's addressed with Bitcoin. Now, there's this Bitcoin only clause where BlackRock says that Bitcoin is unique amongst the crypto asset universe, and it's a global monetary alternative and an asset with credible scarcity. This clause pretty much says that Bitcoin is not crypto, and they show this semi-log plot to demonstrate Bitcoin's resilience, as they like to say. So it seems like 4 bear markets and recoveries and the approval of the ETF has proven sufficient to tell clients that Bitcoin has proven itself over the past 15 years and now is kind of an institutional grade asset, which is a great way for someone like BlackRock to phrase Bitcoin to their clients. Now, there's this idea of hedging against macroeconomic uncertainty. This chart here doesn't provide a lot of information whatsoever, but it does compare Bitcoin and gold on the same chart, which is something I think BlackRock's team was trying to do. They want to put Bitcoin in the same, they want to put investors that are thinking about gold in the, they want to attract investors who are thinking about gold. And just any sort of chart where you can compare the correlation of Bitcoin, gold, and the S&P 500 is a good chart. Bitcoin is twice as correlated to the S&P as gold, so this chart actually doesn't really mean anything. However, Bitcoin's correlation hasn't been that significant, as 1-to-1 correlation would be 1, and Bitcoin is at 0.2 on this chart. But again, that's just kind of a something they needed to hit, the correlation between markets, Bitcoin and gold. Now, they finally try to address this idea that's like, okay, if Bitcoin's a hedge against inflation and geopolitical uncertainty, why does it take a hit every time there's some sort of outbreak or, uncertain event in the world? What they attempt to do is show that Bitcoin rebounds quite dramatically after any sort of expression of doubt has been. What they try to show is that Bitcoin is a 24/7 traded asset, and what they try to show is that Bitcoin is traded 24/7, so any sort of market sentiment can be immediately expressed in Bitcoin, especially over a weekend. And so that's part of the reason why Bitcoin takes such quick volatile hits when there's geopolitical uncertainty. And then they try to explain to clients that Bitcoin tends to rebound very, very quickly after these sort of quick market expressions. Now, finally, they have the last section on U.S. debt, and this, they don't go into great detail as it's not in their best interest to speak ill about the U.S. government, but this is something that a lot of people are concerned about, and I think having this sort of clause plants a seed of doubt in people's minds and creates this link, and I think a lot of people who own Bitcoin have this neural pathway well established that increasing U.S. debt will pump our bags. And I think they needed to plant this in the Bitcoin article for clients to start to make the connection that, oh, okay, so runaway U.S. debt, I need a hard asset that can act as a vacuum for dollar printing. Oh, maybe Bitcoin is a good hedge here. So that's I think what they're doing with those different charts. And all in all, obviously a very pro Bitcoin article. I think it was well written, well presented, and it hit all the points they're looking to hit. And for a lot of investors, hearing that, seeing that chart, I think seeing all those charts, the repeated comparisons to gold, the quick mention of the U.S. Debt to GDP ratio, it's all helpful and it all plants the seeds. And clearly, people have been asking about Bitcoin if this letter was issued to investors upon their request. So things are good, things are looking up, and yeah, thanks for watching. I'll catch you guys next time.